A lot of people think that crypto is a scam, crypto is gambling, it's a pure luck. But the truth is, crypto is one of the biggest technological revolutions in human history. And the reason why most people lose money in crypto is because they never learn the fundamentals. They will buy what influencers speak about on social media, they panic sell when the price goes down, and they have no strategy, no research, no discipline. No research skills, no discipline whatsoever. So now, today I want to teach you what crypto is from zero, if you were just starting. No technical words, no confusion, just very clear explanations. So hopefully, by the end of this video, you understand what crypto is, why it has so much value, how to research projects, the best websites and tools that you can use, and how to invest safely and how to start. So what is crypto? Before you understand crypto, you must understand what money is really. Money has three main functions: store of value, medium of exchange, unit of account. For thousands of years, we've had gold, silver, paper money, digital banking, but modern money has a huge problem. Governments can print unlimited money. When they print money, your money that you have in the bank or in your pocket becomes worthless. This is called inflation, and crypto was created to fix this. Cryptocurrency is digital money that lives on the internet and is controlled by code, not by banks. For example, if you send money through a bank, the bank approves this transfer, it charges you fees, and it can freeze your funds as well. If you send crypto, there is no bank, there is no permission, and it's global and instant. So crypto gives you this financial freedom. Let's talk about blockchain. It sounds complicated, but it's pretty simple. Imagine you've got a notebook. Every page records transactions. Everyone in the world has a copy. No one can erase past pages. That's what it is. This notebook is the blockchain. You have blocks and you have chains. A block is a batch of transactions. A chain, blocks linked together forever. That's what it is. And this makes crypto transparent, secure, and trustless. Now you might ask me, why would this be revolutionary? And the blockchain is revolutionary because you don't need banks, you don't need lawyers, you don't need a middleman, you don't need governments in all of this. Code replaces trust. You would hear on social media people speaking about different types of crypto. You have Bitcoin. I believe all of you have ever heard of Bitcoin. That's digital gold. Bitcoin is the first crypto. It has limited supply. Only 21 million Bitcoins can ever exist. And Bitcoin is also a store of value. People buy Bitcoin like a digital gold. You would have probably heard as well Ethereum. Ethereum allows smart contracts. And smart contracts is basically programs that run automatically. If I send money, I get an automatic transfer. There is no lawyer, no middleman, and that's what the smart contracts is. It's automatic programs on the blockchain. And you can think of it like a vending machine. You go to a vending machine, you put the money in, and it automatically gives you a drink. There is no human that is needed in this process. And crypto smart contracts do the same for loans, for trading, for gaming, for projects, and so on. Now, let me explain to you what is the difference between a coin and a token. Coin is a native blockchain currency. That's projects like Bitcoin, Ethereum, Solana, and they're so-called layer ones. Tokens, these are projects that run on another blockchain. USDC, Uniswap, and any other project that comes to your mind. You can go to CoinMarketCap or CoinGecko, we'll talk about the website shortly, and see which blockchain it is built on. The blockchain, that is your coin, and the token is the project that runs on the base on this blockchain. Tokens are like the apps on your phone, and coins are the phone itself. So layer 1 blockchains, these are the main networks. You've got Solana, Avalanche, Sui, Cardano. These compete to be faster and cheaper than Ethereum, and they are in fact. Tokens, these, as I said, are the apps on the blockchain. These are apps built on blockchains for decentralized finance, gaming tokens, AI tokens, meme coins. Tokens are like the apps on your phone. They're built on the phone. Why crypto has value nowadays? Why Bitcoin reached $226,000? Are you asking this question? A lot of people come and ask me and they say it's not real. Well, first of all, Bitcoin is scarce. Gold is valuable because it's rare. Bitcoin is valuable because it's digitally scarce. Only 21 million Bitcoin will ever exist. Second is demand. Millions of people want Bitcoin. Investors, institutions, governments, companies. More demand, and this limited supply that we have of 21 million Bitcoin that will ever exist, this drives the price higher and higher. And third, crypto has utility. It is used for payments nowadays, smart contracts, gaming, artificial intelligence, decentralized finance, and so on. Ethereum and Solana, for example, are used by millions of users. And fourth, I would say trust and scarcity. Bitcoin has never been hacked. The blockchain runs 24/7 globally. Trust comes from math and code. You might ask, well, why the price goes up and down? Why the price goes up and down? Well, crypto moves in cycles. It doesn't move straight up or straight down. We have a bear market, and that's usually the best time to buy because prices are very low, people are scared, media says that crypto is dead. This is where big players buy in the bear market, and we're in bear market right now because Bitcoin dropped from 126 in October $1,000 to now $65,000. That's around 40 to 43% drop, and that's we entering the bear market. We have another phase called bull market. That's where retail investors enter, normal people like yourselves, which is where the mistake comes from. Prices go up during a bull market, everyone talks about crypto, and influencers appear. That's the second time. Here I would say you should be scaling out and selling rather than entering. And there is also the stage, the last final stage, the euphoria. That's top signals. Here we have meme coins exploding, taxi drivers giving crypto tips, cashiers, anyone talking about crypto, and everyone thinks that they are a genius and they're gonna become millionaires overnight. This is where big players, institutions sell smart money, so-called smart money sells. Now this was the theory behind Bitcoin, blockchain, and some of the narratives. Now I want to tell you that I have developed a very detailed course for you, which is available on Udemy. You can purchase it. It starts from complete beginners, from level zero to advanced trader and investor. You can purchase that and start learning and investing today. Or if you don't want to purchase on Udemy, you use the link under the description and purchase this bundle Saratoshi Academy, which gives you access to the same course. At the same time, it gives you all-time access to the VIP Discord to be part of the community and be part of the mentorship program, which I can help you and bring you up to speed with your investments. Whichever suits you, you'll find links in the description below, and I'll be very happy to welcome you. Now, I want to explain to you the market structure. First, you start with market cap. You would hear that look at this project with 1 million market cap, look at this project with $10 billion market cap. Market cap is price by total supply. Let's say if a coin costs you $10 and there will be only 1 million coins as total supply, this brings the market cap to $10 million. So that's the price times supply. And usually large market cap crypto projects, these are safer, and these are projects like Bitcoin and Ethereum, potentially Solana, XRP. You have also mid cap projects. These are from $1 billion to $10 billion market cap. You can see those here on CoinMarketCap. We use this website. All of these, you can see the market cap here in this column. We have small caps, that's from $100 million to $1 billion market cap. And micro caps are all the projects below $100 million market cap. So these are the different categories that you would hear people talking about. The larger the market cap, the safer the project typically is. The smaller the market cap, especially micro caps, are very risky, and I'll tell you why shortly. Another important aspect to understand is tokenomics, how the coin's supply actually works. So we talked about the total supply. We'll go and we'll check. This is how many coins will ever exist. You also have circulating supply. How many coins are available right now to purchase? That's how many are in circulation available to purchase from the total supply. You also have team allocation, how many coins the founders own. That's an important one. And there is another term called vesting. So when there are tokens that are locked, these will be released at some point, and usually projects have the so-called vesting schedule. So if not everything from the supply is circulated yet, then the other portion means it's locked and will be released over time. And usually those unlocks are causing selling pressure. So it's very important that you understand the vesting schedules as well. That's fully available and explained on my course. And usually bad tokenomics, if you have bad tokenomics, it guarantees a failure in the project, potentially dump. Another important thing to look for apart from the tokenomics is the liquidity. Liquidity is how easy you can buy or sell without moving the price. Bitcoin, of course, has high liquidity, it's stable, and big market. Small meme coins, if you take any other project that is in the last category, micro cap, usually they have low liquidity. The price will jump fast up and down. So low liquidity means big pumps to the upside, but also very big crashes. That's just some key metrics to look for. If you want to really start researching, if you want to learn how to research, I have a full course video available on YouTube. You can watch that. But before you buy any coin in general, you should ask yourself, who built this project? Is there a real team behind that? LinkedIn profiles, past projects. Usually, anonymous developers is high risk. I wouldn't want to see that. The second thing to look for is tokenomics, which we briefly discussed, basically how the token works. Check here total supply, circulating supply, inflation, vesting schedule. Let's say if the insiders or the team own 90% of the supply, this is a very high risk. You want to see fair distributions in the holders. Use case. What problem does this project solve? If the answer is only number go up, be careful. You need to find a real use case. Community. You need active and engaged community. Check their Twitter, Discord, Telegram. Active community is signal for a healthy project. Check for funding. Check who is partnered up with this project, the partnerships, the money, the funding that goes into this project. Usually venture capital backed projects have money to build, partnerships and marketing. But the downside to this is that sometimes ventures can also dump tokens and manipulate the price. But in general, nowadays in crypto, it is safer to follow the big money. Now, I want to share with you a couple of websites that you can use to track different things. You can use to try price and market data, two websites, CoinMarketCap and CoinGecko. On these two websites, you can see price, you can see market cap, you can see supply, you can see where the project is listed, on which exchange it is available. So those two are very useful to start the research of your project. Definitely you should start exploring one of those now. When it comes to charts, if you want to see charts, I recommend TradingView as a start. You can draw lines, you can use indicators, see trends, and so on. So TradingView is a good one. Then blockchain explorers. For each blockchain, there is a separate explorer. For Ethereum, there is Etherscan. For Solana, there is Solscan. For Bitcoin, blockchain. On these trackers, what you can track is the wallets. You can track wallets. You can see movements of whales, whales are basically called people who have big money into this project. You can verify transactions. This is what you can use the blockchain explorers for. That's another useful one. There are also research platforms like Messari, DeFi Llama, and Token Terminal. I will drop a free guide with this video. You can have a look, you can download it for free and check these websites in your own time, but they show revenue, they show users, they show fundamentals, they show the volume on the project, the revenue, the users, which is very important. You don't want just a name of a project, you want real usage, real users, and this project generating real revenue. It's another important point. Now, if you want to buy crypto, you would obviously register with an exchange, but I also recommend then storing your crypto long-term on cold wallet. You can order a ledger, you can order a Tangem. I personally use Tangem, and you can find link in my description below that gives you 10% off. You can use that, save and invest into the market. Use the link in the description under my video to save 10%. Because cold wallet is safe. Even if the exchange goes bankrupt, it disappears, it doesn't matter. You are owning your crypto separately, safely. Now, when you're creating your accounts, you would have to set up something called seed phrase. Your seed phrase is your money. Remember it this way. Never screenshot it, never share it with anyone, and never store it online. If you have serious money, as I said, definitely use a cold wallet, cold storage. Hardware wallet is mandatory if you have more money. And never connect your main wallet to random websites. And never forget your seed phrase, of course. Write it down somewhere, save it somewhere. I'm not online, of course, and make sure you remember it, because if you lose it, basically you can't get access to your crypto. Right, now I think you're ready to start building your portfolio. If you're a beginner, I would give you a beginner portfolio that you can start with. I recommend putting your money into Bitcoin, 40%. Let's say if you have $1,000 to invest, I would say 50% of it dedicated to Bitcoin, 25% into Ethereum, and the remaining put it into large cap projects like Solana, Sui, Avalanche, Cardano, and then leave 5 to 10% actually to invest into mid cap and high risk coins. But that should be only 5% of your portfolio. 5% of the money that you have to invest dedicated for high risk projects, because those high, usually in crypto we say high risk, high reward. So you have a better chance for high reward, but again, you don't want to put too much risk as of now yet. So limit the risky coins to 5% of your portfolio, dedicate 50% to Bitcoin, 20% to Ethereum, and then the remaining in large cap projects like Solana, Sui, XRP, Avalanche, Cardano, BNB. Research those, and whatever you have conviction in, go for that. What I would recommend is never going all in on one coin. Make sure that you have diversified. Never invest money that you can't afford to lose. Your money for rent, your money for food, forget about that. And DCA instead of lump sum. What I mean by DCA, dollar cost averaging. Let's say if you buy Bitcoin at $100,000, if it drops to 80,000, buy more. If it drops to 70,000, buy again. So don't spend all your money in one shot, because the market continues to go down and goes up. And the lower you buy, at lower price you buy, the better that would be, and the bigger your upside potential would be. Now, before we close off, I want to tell you a couple of psychology tips, because crypto is 90% psychology. Common emotional mistakes in crypto people and crypto investors are fear of missing out, buying the tops. People are afraid of missing out, so they buy when the price is high. Panic selling bottoms. People are emotional, they are afraid, and they sell in loss at the bottom. People often do revenge trading. If they lose, they feel revengeful, they want to revenge on the market, they go and they trade again, and they lose. That's also emotional behavior. And another one is overconfidence. The market will find its way to humble you always, so don't become overly confident and jumping big on certain things. Instead, build a winning mindset. Think in years, not just days, not what the price would do in 1 hour, in 2 hours. If you're a beginner, think long term, in years. Stick to a plan. Develop a certain plan, stick to it. Ignore all the noise and always take profits. Don't just wait for some unrealistic targets. Keep taking profits, scaling out slowly. And how people usually get rich in crypto, they get rich by buying early in bear markets, when the prices are low, when everyone is saying that crypto is dead. This is how people get rich. People also get rich by holding strong projects with fundamentals, taking profits in bull runs and repeating cycles, not by gambling on memes, not by giving up, panicking, selling in loss. So if you understand everything in this video, you are already ahead of most people in crypto. Crypto is risky, don't forget that. It is very volatile, but it is also one of the biggest opportunities of this generation. Now, if you want to see what I research, my portfolio, what I buy, what I sell, some premium education, join my Discord community, or you can purchase any of the bundles available here that you see on the screen. Now, please comment below anything that you want me to explain in the next video, any questions that you have, and I'll reply to that. Thank you so much for watching. I'll see you in the next video.